morning, friends. Thank you for joining us on this WTV special on putting your mind over the market. I'm Jared Levy, Chief Options Strategist here on Live Trade TV, and using psychology in today's market is not an easy thing to master. It takes a lot of discipline and skill to become a consistent and successful trader. Here to talk to you about what you need to do in order to put your mind over the market is Mark Douglas. Mark has been a successful trader since the 80s and has written 2 books on trading psychology, both Trading in the Zone and The Disciplined Trader. You've heard me talk about them many times here on WTV, and he is here today to help you become successful traders. Mark, good morning.
How's it going? Good morning, Jared. Glad to be here, and I hope I can be of assistance.
And I think it's one of the least understood concepts of trading. Can you address this a little bit?
Yeah, that's actually a really good place to start because I think that more than anything, what your viewers want or what your customers want are consistent results. They want to be able to produce an income that that they can rely on from their trading, and I'm sure that many of your viewers have already realized that's getting a steady income is not such an easy task.
Yeah, and everyone seems to get trapped thinking that because trading is easy, or because it's easy to find yourself in a winning trade, which many people do.
Right.
That you think it's also easy to become a consistent winner.
Right.
And it took a long time before it actually dawned on me that winning and being a consistent winner are 2 completely different animals, 2 different things. And in some ways, there isn't even a relationship between the 2.
It almost seems like there's no relationship between the 2.
Yeah.
That's what you're saying, right?
Yeah.
Yeah, that's a real hard mental barrier to break through. Mainly because, it's so easy to find yourself in a winning trade because winning actually requires no skill at all. In other words, unless you consider that, the being able to click a mouse button or, tap a pad is a skill. And we don't have to have a reason or good reason or actually any reason to put your cursor on the buy or sell button and then immediately find ourselves in a winning trade. And it could be a monster of a winning trade. And what did it take? What kind of skills did it take to actually experience this? Absolutely not.
Yes. It's natural to take the leap from, if it's this easy to win, it can't be that much harder to make a steady income. Like you said, it's that easy to click the mouse and for me to sit there and make $5,000 or $10,000, and it must be pretty darn easy for me to sit there and make a living out of this. And that's what I thought for a long time, but that is not the case.
No, that's exactly how I started out too. And I know, not unlike a lot of other people who are willing to, let's say, give up a real high-paying career to be a trader because they thought it couldn't be that hard.
So what makes consistency so challenging? What's the big hurdle?
Well, we're gonna get into that, but at the most general level, I'm going to say that it requires learning the type of skills that people just simply aren't used to learning. Mental skills, yeah, exactly. In other words, it requires mental skills. Most people assume that because their technical method gives them a signal to get into a trade, that if the method produces a high percentage of winners, it will equate to a consistent income, not taking into consideration that the proper execution of those signals requires mental skills.
Look into long.
For example, high school
Open it next 30-minute candle.
He'll go in the gym and practice throwing his free throws.
His favorite look up here and watch him.
It wouldn't be unusual for him to
One price to go below it.
That's not the realm of reality, right? Okay, so the problem is that could he even hit 2 in a row if the circumstances were he was in the final game of the NCAA championship, his team is down 1 point, there's only a few seconds left on the clock, and he was just fouled. Yeah, under those circumstances, without the appropriate mental skills, hitting either one of those three things is very likely. And regardless of how well someone could do it in practice, most people would choke.
So really the skills you're referring to, what you're talking about, Mark, is actually staying focused.
See if price starts going back up. If it starts going back up, I'm going to get into buzz.
Of throwing the ball, in our case, obviously, of trading or following it, and not being worried about blowing it, about the consequences of what could happen if this trade goes wrong.
Exactly right. Just like what I'm going through right now. Trying to stay focused on the process of this presentation and not blowing it.
Are you joking at that?
Anyway, with training, we may have a technical method telling us what to do and giving us the potential to generate consistent results. But like the basketball player, without developing the appropriate mental skills, it's unlikely we'll be able to do what our method, our trading plan is indicating without making a number of potential execution errors. In other words, to stay positively focused on the process of trading by doing exactly what we need to do, when we need to do it, without hesitation, reservation, or fear. Okay. You see, no matter how good a
Before
technical
break
method is
even.
at generating winning trades, turning those winners into a consistent income requires the ability to do or not do some things that the method itself can't help us with. For example, our method can't force us to predefine the risk of getting into a trade. Or if we do predefine the risk, our method can't force us to take the loss that ends up turning into a bigger loss. And that's happened to everybody. Okay? Our method can't prevent us from moving a stop closer to our entry point where we get stopped out and the market trades back in our favor. Our method can't prevent us from hesitating and getting in too late. Or our method can't stop us from jumping the gun and getting in too soon, where the signal to actually get in never really develops. And our method can't stop us from getting out of a winning trade too soon and leave money on the table. Nor can it prevent us from letting a winning trade turn into a losing trade without having taken any profit.
I know that all of our traders have experienced these issues. I know they have, and I think really what you're saying is that the methodology, and this methodology, folks, what we're talking about, the word methodology is the Wise Trade software, that's our method. And it can give us winning trades. We've seen, I know all of you have had winning trades, but it cannot give
That
us
inverted fair value
consistent
gap I'm
results
watching.
if we're susceptible to making the kind of mental errors that you're talking about here. Okay?
Exactly right. Yeah, that's exactly what
I'll
I'm
leave the
saying.
rest to
And all the
TP.
mental errors I just listed are the result of thinking, believing, or assuming that our technical method is telling us what's going to happen next on a trade-by-trade basis, and not understanding that technical methods aren't designed to do that. Technical methods and patterns are designed to put the odds of success in our favor over a series of trades. It may not seem like it on the surface, but there's some profound psychological implications here. What this means is the outcome of the signals generated by any technical method on a trade-by-trade basis are unique and random. In other words, there's no way to know in advance what the outcome to any particular signal will be,
We're gonna
or what the
close up to
sequence
this
of
out
wins
very
or
soon.
losses will be over a series of trades. And that's all.
I understand what you're saying. I think, we need to, first of all, know that many of our viewers out
Cool
there
with
are
that.
experiencing the same. Okay.
Let's go.
And probably have grasping this concept
W.
that by accepting the randomness of these outcomes, they can produce consistent results. That's an odd concept.
Yeah, that's exactly what I'm saying, Jared. I know it's somewhat of a paradox to think that events that have a random outcome can produce a consistent result. But think about it. This is the principle that's been used by casinos for hundreds of years. Technical methods and patterns will give the individual trader the same kind of advantage the casino has over the individual player. If the trader can think about it from the proper perspective. On the other hand, if a trader who has generated his signal from a technical method hasn't learned to integrate this principle, this randomness principle, into his trading regimen, he will undoubtedly find that trading can be one of the most frustrating, if not exasperating, endeavors he's ever chosen to undertake.
And I know there are a lot of viewers out there who may be experiencing frustration. In fact, I know there are definitely viewers who are experiencing frustration, but I'm sure if they're making the connection that the reason because they don't believe in this randomness principle where you can generate consistent returns by looking at the outcomes of their trades as random and unique. They have to be able to view that as random and unique. That's I think the big issue.
No, I know, and that's why we're here explaining it right now. You see, the frustration comes from our expectations, from expecting something from our technical method it just can't do. Technical methods define and identify patterns in collective human behavior. Now, the patterns definitely exist. They repeat themselves over and over again. The problem is the outcomes don't always correspond with the patterns on a trade-by-trade basis. So what I'm saying is that, yes, we have patterns. Yes, they repeat themselves over and over, and our minds just naturally think, well, I have a pattern that's consistent. I should have an outcome that's consistent with the pattern, and that's not what I'm saying at all. What I'm saying is that there doesn't have to be a relationship between the outcome and the pattern.
So, and if the last trade was a winner, right? Even if the odds are the same, even if we've got the same exact signal, the same looking chart, there's no guarantee that this trade is going to be the exact same as the past one.
Exactly. In other words, this trade, the trade I'm in right now, could turn out to be a winner. And does that mean that the next trade is going to be a winner? Absolutely not. This trade I'm in right now could end up being a loser. And does that mean that the next trade is going to be a loser? No, absolutely not.
So this is interesting. I mean, I'm trying to, for us up here, the goal, the main goal is obviously to take these concepts and reduce them down to the most simple of terms. So, let's back up here for a second. There are traders out there using WiseTrade every single day. They're getting the same exact patterns. Okay? But what you're saying is, even though the specific criteria is being used to identify the pattern, okay? For each signal, same criteria, same formula, same everything.
Right. The chart pattern can look exactly the same. Everything.
Right. The outcomes to each signal have no relationship to one another.
That's right. That's exactly what I'm saying. That there's a random distribution between wins and losses over any sequence of trades that you might look at. And so, and again, this is a very difficult concept to grasp, but it's really the traders who have grasped it, let's say, and learned how to think in what I call probabilities. They're the ones that don't experience the same kind of emotional trauma that the typical trader does, because they're expecting something that just may not happen. So, for example, if this trade's a winner based on this particular trade I'm in right now, based on the exact same criteria that, or let's say I'm in a trade right now, or I'm getting into a trade right now, and the exact same criteria exists in the market that did the last time, I'm going to naturally expect it to be a winner if it was a winner last time. Or I probably will naturally expect it to be a loser if it was a loser maybe the last time, or we had 2 or 3 losers in a row.
And this could be a source of frustration to trade.
Oh, absolutely. In other words, and that's exactly what happens. It is a source of frustration, because if I'm expecting it to be a winner and it turns out to be a loser, I'm going to be frustrated. Not only going to be frustrated, I'm going to be disappointed, and I may even feel betrayed, depending on how much kind of energy that I put into the idea that the trader is going to be right.
Well, how do we get over that? I mean, how does a trader take, okay, so I've got all the things right. I've got my charts lined up. I've done everything I was supposed to do. How does the trader at least begin to accept these sorts of things, or how do they begin to remedy this issue?
Well, we kind of have to get into the nuts and bolts of this, of just exactly how the markets work, because I think that one of the big problems, one of the reasons why people have such a difficult time with this, is because their initial exposure to the markets themselves is through electronics. In other words, there's through electronics, there's a real disconnect between what you're actually participating in and what's causing you to want to participate in the first place. In other words, markets started as exchanges, and there were and so someone trade do it in practice. So you know that all prices are people-generated events. They are, and see, most people would choke.
So really the skills you're referring to, what you're talking about, Mark, is actually staying focused.
If price starts going back up, if it starts going back up, I'm going to get into buzz.
Of throwing the ball. In our case, obviously,
someone could do it in practice.